Imagine turning $1,000 into $2 million. Sounds like a dream, right? But for one ordinary man, it was a reality. Meet John, a regular guy from a small town. He had a 9-to-5 job, worked his socks off, and lived paycheck to paycheck. His life was as average as it could be, until one day he stumbled upon a book about investing. It wasn't a glamorous get-rich-quick guide, but a practical handbook that introduced him to the world of stocks and shares. Intrigued by the potential of turning small savings into significant wealth, John decided to dip his toes in the stock market. He took $1,000 from his savings, the equivalent of a month's salary, and invested it in a company that he believed had potential. The company was not a tech giant or a well-established corporation, but a small biotech firm on the brink of a breakthrough. It was a risky move, but John was not deterred. He believed in the company's mission and the promise of its groundbreaking research. Moreover, he knew that the most significant rewards often come with the greatest risks. And so, he waited and watched as the company's stock price fluctuated. There were days when the value of his investment plummeted, and there were days when it soared. But John held his ground, refusing to let fear or greed sway his decision. Then, one day, the unexpected happened. The biotech firm announced a breakthrough in their research, and their stock price skyrocketed. John's modest investment of $1,000 ballooned into a staggering $2 million. And just like that, an ordinary man became an extraordinary investor. So, how did he do it? What was his secret? You might be wondering. Well, let's take a deep dive into the strategy that turned our unlikely millionaire into a stock market success story. His strategy wasn't a secret formula or a magic trick. It was a combination of solid research, patience, and calculated risk-taking. Yes, you heard it right. Investing in the stock market isn't about making quick decisions or following the latest trends. It's a game of strategy that requires patience and a keen eye for detail. Our unlikely millionaire spent countless hours researching the market. He studied the industry trends, analyzed company financials, and even kept tabs on the global economic factors that could potentially impact the stock prices. Research, as you can see, was the backbone of his investment strategy. But research without patience is like a car without fuel. It won't take you anywhere. Patience is the key to weathering the ups and downs of the stock market. It's the virtue that enables investors to hold on to their investments even when the market seems to be against them. Our unlikely millionaire understood this. He knew that the real profits in the stock market come from long-term investments, not from short-term trading. Now let's talk about the third aspect of his strategy: calculated risk-taking. The stock market, as we all know, is a risky business. But our unlikely millionaire didn't shy away from taking risks. Instead, he calculated them. With every investment, he assessed the potential returns against the possible losses. He knew that to win big, he had to bet big, but he also knew that he had to make sure his bets were well calculated. But there's another secret ingredient in his recipe for success: emotional intelligence. Investing is as much about managing your emotions as it is about managing your money. It's about staying calm under pressure, not letting fear or greed drive your decisions, and always staying focused on your long-term goals. Our unlikely millionaire mastered the art of emotional intelligence, and it played a crucial role in his success. The secret to his success: patience, research, and a dash of daring. And let's not forget, a healthy dose of emotional intelligence. That's the strategy that turned an ordinary guy into an extraordinary investor. But it wasn't all smooth sailing. The stock market is a roller coaster after all. Picture this: you're at the peak of the first climb of a roller coaster, the wind tussling your hair, the world below you. But then, the drop comes. The sudden plummet, the rush of adrenaline, the scream that's caught in your throat. That's what the stock market felt like for our investor. There were times when the market soared, reaching dizzying heights. His portfolio swelled, ballooning with gains. It felt like the rush of the wind during the roller coaster's first climb. The thrill was intoxicating, but then came the drops. The market is fickle, unpredictable. It giveth, and it taketh away. And oh boy, did it take away. There were days when the losses piled up, the numbers in red, a sea of minus signs. It was like the gut-wrenching drop of the roller coaster. The world seemed to spin, the wind knocked out of him. The volatility of the stock market is not for the faint of heart. It tests your resilience, your will. It's a mental game as much as it is a financial one. Our investor had to learn to keep his emotions in check, to not let the fear of loss dictate his decisions. It was a hard lesson, one that came with its fair share of sleepless nights and anxious days. But it was in these moments of adversity that he learned the most. He learned to view losses as lessons, not failures. He learned to stay the course, to not be swayed by the highs and lows. He learned to trust in his strategy, to believe in the process. The roller coaster ride of the stock market taught him resilience, patience, and the value of a well-thought-out strategy. The stock market is a roller coaster, a thrilling, terrifying, exhilarating ride. But our investor didn't just survive the ride, he thrived. He weathered the storms, rode out the drops, and came out on the other side, stronger and wiser. In the face of adversity, he emerged stronger and wiser. So, what can we learn from our unlikely millionaire? Well, first and foremost, it's about the long game. Yes, those overnight success stories sound enticing, but let's be real, they're as rare as a unicorn doing a moonwalk. Our millionaire friend didn't just wake up one morning to find a pot of gold at the end of his portfolio. No, he played the long game, patiently waiting for his investments to mature over time. Remember, Rome wasn't built in a day, and neither are fortunes. Secondly, it's about knowledge. Knowledge is power, right? But in the stock market, knowledge is more than power, it's your lifeline. Our millionaire didn't just throw darts at a board of stocks and hope for the best. He armed himself with knowledge, understanding the ins and outs of his chosen investments, the market trends, and economic indicators. He became a student of the game, and so should you. Finally, it's about emotional resilience. The stock market is a roller coaster, and if you can't handle the ride, you're better off staying on the ground. Our millionaire had his fair share of ups and downs, but he didn't let his emotions dictate his decisions. When the market dipped, he didn't panic and sell. Instead, he held his nerve, trusted his strategy, and stayed the course. In essence, the stock market isn't for the faint-hearted. It requires patience, knowledge, and a good deal of emotional fortitude. But as our millionaire's story shows, if you're willing to put in the time, do your homework, and keep your cool when the going gets tough, you too can come out on top. So, let's recap. Patience, check. Knowledge, check. Emotional resilience, check. Sounds like a recipe for success, doesn't it? But remember, there's no guarantee. The stock market is unpredictable, and even the best-laid plans can go awry. But armed with these lessons, you're better equipped to navigate the choppy waters of investing. Lessons from a millionaire. Invest in knowledge, stay the course, and above all, keep your cool. The stock market isn't a get-rich-quick scheme. It's a tool for building wealth over time. This is the crux of what we've discussed today. We've delved into the lives of unlikely millionaires, dissected their strategies, and ridden the roller coaster of their investment journeys. Each of these stories taught us valuable lessons. We learned that patience and disciplined investing, not impulsive decisions, are the keys to wealth creation. We discovered that understanding the fundamentals of a company, rather than chasing hot tips, is what separates successful investors from the pack. We realized that the stock market isn't a playground for the faint-hearted. It demands resilience, courage, and a willingness to learn from mistakes. But most importantly, we understood that the stock market is accessible to everyone, not just the Wall Street elites. It's a field where the underdog can triumph, where the ordinary can become extraordinary with the right mindset and strategy. Remember, every millionaire investor started with their first stock. So when are you starting your journey?